trading can be pretty complicated when you're looking at all these charts and wondering what direction is price going in. This is the 1 hour time frame right now, but if you're a day trader or a scalper, how do you know exactly which direction to trade in when you're trading during the day? I'm going to walk through a whole trade for you. So I'll show you from start to end, how did I know what direction the price was going in? What levels do I have? What is the process of charting? And kind of, it's the same process I do for every single stock, every day. So let's go back to the 1 hour time frame. The very first thing I like to look at is when I zoom in into the 1 hour time frame, I want to see, is this even a stock that I want to trade today? Reason being is if I'm looking at the 1 hour time frame and I see that overall the market movement is clean, meaning there's market structure, we have a trend that's very obvious. So here we can see the trend is very obvious. It's a bullish trend. If I can tell exactly what trend we're in or the market movement is clean, that is something that I want to trade. If I'm looking at another stock, it may not be as clean like this. It may just be choppy and everything. That is something where I know I don't even want to trade this stock this day because it's so messy. So looking at this, let's go to let's cover up all the movement. So I'm going to go through a trade I took the other day. It was on this Thursday movement. So up till this point, we're going to cover everything. So during this Thursday, I took a trade here, but we're going to cover all of that. That way we know how did I exactly have my levels marked and how did I know exactly where I should enter that day. So now we have everything up. This is everything I would have seen right before the market opened. So the very first thing I look at is the weekly chart, and this is where I draw my support and resistance areas. These are much stronger levels that I like to use, and this is what will be reflected on the smaller time frame. So just from looking at the weekly chart, what I want to do is I want to draw these levels by connecting areas where previous weekly levels have been shown, and then I want to connect that to make an area. So we know that price is right here. 226.05 was the current price. Now this was the current weekly candlestick, so this candlestick had not closed yet. So I don't want to use that as any sort of level. I want to use previous candlesticks to draw my levels. So looking over here, what I see is an area of resistance. I'm just connecting this candlestick high to this candlestick high because they are very close in proximity. That is going to make a resistance area for me. Then if we look a little lower, we have another area right here. This is an area of support because this wick and this wick make an area. Then you have this candlestick. I'm not dragging it, the other zone, to connect it. That's going to make a very wide zone. So we're just going to keep it at that. And then of course the next closest area is going to be all the way down here. So it's pretty far away. We're just focusing on more current price. That way we know exactly what levels to look at. There's no reason to connect anything down here. So after this time frame, I like to go to the daily chart to look for any gaps as well as candlestick patterns. So what I'm looking at here is gaps. What I see is a daily gap right there. I'm just marking it and I change it to the relevant color. I like to use purple. That way I know whenever I'm trading on a smaller time frame, I don't have to keep switching between time frames to know exactly what these levels mean and what really is going on. So color code everything has been very helpful. Then looking at other gaps, there aren't any more gaps. There was a previous gap here. You could see this empty space, but this gap got filled, so it's no longer of relevance. Then I look for any candlestick patterns. Right now, I don't see any. I'm typically looking for engulfing candlesticks or harami candlesticks. Right here we just see a very strong uptrend with all the green candles, so nothing on the daily. The next thing I do is go to the 1 hour. On the 1 hour, which we saw earlier, I look at, are these levels relevant? So do we see reactions previously? If I see them respecting previously, that is a strong level that I want to keep. So I'm keeping that level. Down here, I see that price is still reacting off of it, still reacting in this area, so I'm keeping the level. Same thing down here, we see price react on the left, react again, it's kind of reacting here, and then react some more in recent times, so you see it retest. So that these are very relevant levels where I look for reactions and how price can kind of be as confirmation when I take a trade. Next thing I look at is I want to essentially evaluate the entire movement of this chart. So what exactly is going on? How am I understanding the trend currently? We are at all-time highs right here. And from previous movement, we can see that price was bearish. We have high, just market structure, low, high, low, consolidation, push down, consolidation. Got a little messy here by breaking higher, but then we broke all the way down. And then now this is the start of a bullish trend. So now we're bullish on Apple. Now getting ready for the current day, all I'm looking at is, if I understand the overall trend, we see that the price is bullish. So we know it's a bullish trend. Then what we see here is, if we zoom in, price has already broken this resistance area during pre-market time. So because it has previously reacted very nicely to these areas and price action is very clean, this market structure, I'm assuming that if price breaks this level, it should not break back down if it's truly respecting all these levels. So my assumption is, if I'm bullish, it has already broken this resistance. I'm going to look for a bullish move higher. Any kind of bearish move will be against the overall bullish trend, so that's when I won't even take that trade. So I'm only looking for calls on this particular day. Then we go to the next time frame. So on the 5-minute time frame is the last time frame that I look at to draw any kind of key levels. The very first thing I like to do is draw a previous day high. So this is the Wednesday movement. We color code everything again so we understand exactly what's going on. High of the previous day, then you have the low, which is this candlestick. Then you have pre-market low, which is all the way down here. And then we change that to a dotted line. That's how I like to color code it. And then you have pre-market high right there. Change that to green. Here, what we can already see is that price broke above this support level. So now that it's above, I do not expect it to push down. What I'm looking for is a bullish entry to go higher. So what I like to do is, this is the 5-minute, and I like to keep it at the 5-minute when I'm charting, or like when I'm watching for how price moves that day, just to see overall, is it going higher? Is it going lower? How is it reacting off all these key levels? So I know that there's a resistance upcoming, and then we're at support. So we're kind of in an area where it has room to run up and down. So then the market opens, and this is exactly what I saw. Price opened with a very strong red candle, pushed all the way down, and then the next candle, they all look bearish at this point, but because we're not just jumping into to trade, we know that everything's going up. I'm only looking for a bullish entry. So any sort of bearish entry or bearish strength, there's nothing for me to enter, because I'm following my trading plan of trading with the trend. At this point, all I see here is that price pushed down and is reacting off of this high of the previous day, as well as this support area. So now we have rejections with wicks. Then next candle, again, still in the area, it's basically consolidating, going sideways. Then over here, so when I saw this as a bullish engulfing. So a bullish engulfing just means that this candle has a very big body, and the body is bigger than the previous red body. This is a bullish engulfing showing a bullish trend or a reversal of a support area. So once I saw that, that was my first clue that price is probably going to go up. We have a reaction of a lot of wicks. We have a bullish engulfing at support. And also, this is also a break and retest. So a break above a strong level and a retest. So those were all the confluences I saw. Now I'm looking for the entry. So for the entry, I like to use the 2-minute time frame. So if we go to the 2-minute here, this is a time frame that I like to use for any sort of execution. And I also have my 9 EMA. I use the 9 exponential moving average. That's an indicator that I like to use just to give me extra confirmation when I'm in a trade, whether to trail my stop or confirmation to enter the trade. So what I see here is that price has, bounced off of this support area, has a lot of weakness. Price is not able to break through. We now have a retest, and price broke above this 9 EMA. Whenever price is trading above the 9 EMA, especially in a bullish move, that's added confirmation that that trend is going in that direction. So the next thing I see is that price is now over this 9 EMA. It has also broken above this support level, And so now I'm waiting for an entry. Next candle is sideways. We're just in consolidation for the past 4 minutes. Then what I want to look for is, can it break this area? Meaning that it breaks above consolidation and it's above the 9 EMA. Those are two good confluences to go higher. So then boom, my entry was right here, just above as it broke. Entry there, and then my stop loss. My stop loss is going to be at an area where I know exactly that I want to get out of the trade because it's no longer showing me strength to the upside. So what I'm seeing here is that because it's consolidation, I want my stop loss to be the consolidation low. So right there at this bottom part of this candlestick, that is the consolidation low. And if price breaks down, which it shouldn't if it's in an uptrend, that's going to tell me that price is not as strong. I want to exit my trade. So entry there, stop loss at that white dotted line. And then for target, I don't have a target when I trade. It's all based on how the candlesticks form and what is the strength of the market. I don't ever know how far price can go. It could go as high as this. It may stop here. It may even trend all the way for till this resistance right there. I don't know how far I can go. So my tactic is trail my stop as price moves. That way I can always maximize the maximum profits as high as it can go. So right here, no target. I'm just following how price is moving. Price is breaking now. It's breaking higher. And then my new stop loss is going to be this 9 EMA. That way I know if it really breaks the 9 EMA, I want to exit my trade. Price is pushing up. We have very strong moves up. Great sign of very bullish moves. 9 EMA is my stop loss, so it's already pretty far away. We have a lot of room to run. Another thing to be aware of is when you're in a trade, be aware of where the high of day is, because that could also be a relevant area. So right there is high of day, that white line. Whenever you're in a trade, high of day or even low of day are very relevant areas, because there are some cases where price may not be able to break this area, and that's the highest it can go, and then it reverses. Or it could break all the way through and go higher, but you want to be aware of that level because it is a key level of potential bears sitting there to push down. So then you go higher, looks strong, looks okay. Now we have a push. You saw that very strong red candle. However, it stayed above the 9 EMA and it had a very strong wick here. Retested the 9 EMA, so that's a good sign. It's still above, so nothing to be worried about to be stopped out. Now we have movement over here. So where I had moved my stop loss. So the stop loss was the 9 EMA essentially, and as price keeps moving, it's still the 9 EMA. And then at this point, because it was already sideways, this was my stop loss. One, because price had reacted very strong here. It is basically the low of the consolidation. And then if price really broke through this 9 EMA with strength and held below, that would also be a reason where I would want to be stopped out. However, in this case, price reacted to the 9 EMA, wicked at it, but it didn't close below. So we still have potential where price could go higher. I want to see how price reacts. Then as price goes on, we have push higher. It's above the 9 now, so good sign. Pushing higher. You can see that price is reacting with the wicks. And then you have a push higher. Now it's still reacting, so it looks a little weak, I would say. It's not having very vertical, all green movement. We have some retest and just some sideways movement, but still no reason to exit. Now at this point, price is breaking the high of day. This is now we're cautious. Can it really break and go higher, or is it gonna sit in this area? So 9 EMA is still my stop loss, so right there is my stop loss. So we keep moving it higher and higher. This way, our entry is right here, stop loss is there. So even if you're stopped out, you still are profitable. This is why I like to trail my stop, because I'm still gonna be green in my trade however far it goes. I just keep moving my stop higher and higher, whatever price shows. So as price pushes higher, now we're failing to break this high of day. Now we're sitting in this area. Let's see how far, much higher we can go. Now what we see is prices going sideways, so another consolidation. All this is showing a lot of weakness, I would say, because price isn't super vertical. It's making little consolidations, so it's showing weakness. So at this point, I don't know exactly how strong it can go to go higher, or it may end up pushing down. I'm still aware of the area, but I want to be open to the fact that it could go either way. So still, my stop loss is going to be moved to the 9 EMA right there, and it's a consolidation low. So as price pushes up, you see that price pushed here. That is my stop loss. So another thing is that even if it went through my stop loss, I like to use market orders so I know exactly, even if price wicks at my stop loss, I still want to be in my trade, because many times I've been stopped out based on wicks and then I exit and then it goes. So what I like to do is be manually pressing the buttons of entering or exiting trades. So in this case, stop loss is there, but it didn't really push with strength. It just wicked and went higher, so I'm still in the trade. Stop loss is still this consolidation low area. Then we have more movement sideways, bigger candle. So now we're at the high of day. This is the new high of day. So let's see how it moves. We're still moving sideways. All right, now we break consolidation high. So that is a good thing to see. If price breaks consolidation, we want to see it hold above consolidation. So at this point, my stop loss is now moved to this consolidation high. That way I know if price breaks above and goes back inside it, that is showing a weak breakout. So I want to be out of my trade. So this is my new stop loss because price broke and closed above consolidation. So then the next one, price is wicking at the stop loss, so we're still good. There's still potential, but we're very careful of what's happening. Then the next candle looks weak, it's starting to look weak. And then at this point, price breaks back inside consolidation, so I exit my trade. So my exit was around here because also the 9 EMA is there and is through my stop loss. So that's essentially the whole trade I took from the entry all the way, closer to this support level. And then I just trailed it all the way to the highest part that it could go. Stop me out, and then let's see how the movement went from there. So then price ended up going, and then it just drops. So that is the maximum movement I could have taken. Even if you could have taken this very high of day, there's no telling exactly it was going to reverse at this point. So I take what I can get, the maximum move I can with all the confirmations that I like, and then trail it until there's a reason to exit. So because the reason to exit is it couldn't break the high of day, came back inside, that is the reason I exited. And even if you look from here, it made a high of day, but then it broke down below this higher low area. So then that's also another reason it couldn't hold, breaking below pre-market high. So then that just shows a really weak breakout. So that's where you want to exit a trade. So this is the only movement I would have taken. I'm only taking calls because the overall picture is bullish. I'm not taking any puts. So even if I see here that price is reversing now, I'm not going to enter a trade because that's against the overall trend. So essentially my strategy, or even the process of what I do, is pretty straightforward. Once I find the overall trend, that is the direction I'm going to trade. So I'm only going to take calls in a bullish move up, and then I basically just wait for the setup to happen using different confluences. Is it breaking above levels? Is it retesting? Where's the 9 EMA? Does any candlestick patterns form? What other sizes of the candles or the wicks? That really shows me how price rejects, and then if I see strength, I'm going to enter in that trade. So that's essentially what I do for all the stocks that I look at. I look at all these little tickers, seeing which one I like the setup for, and then if I like the setup overall, then I do a deep dive into the day trades and see how I can execute on the 2-minute chart. So very straightforward and something you can use. It's all price action, and you can even use this on other stocks or other markets in general. It's just technical analysis. It's been very helpful for me, and I found it to really give me an edge in the market when I have all these different confluences and all these strong levels. Wait for the breakout. If price is not in the area that I want, I'm not going to trade. So very concrete levels, very concrete rules. I follow my rules, and if anything happens outside of that, I'll miss out on the move, which is okay. I want to be consistently profitable, so I'm going to wait for the setup that I want.